Alright. Alright, good afternoon everyone. Today is Friday, June 1st, 2012. I'm going to go through all the trade setups that we took this morning, the ones we missed, and all that sort of stuff. Let's start out with the results. You can see the NQ had 14 ticks. The ES had 64 ticks profit, 14 ticks profit. In the YM, I'm not really going to... There was 2 ticks profit over here, but I took that trade and I took a break even on it, and nobody got to see me actually take it, so I'm not taking credit for the YM. But the 14 ticks and the 64 ticks, everybody saw all those going. You know, when I placed the trade, when I took the trade off, and how I managed it. Now, let me start over here with the YM. Okay. The YM did have some trade setups this morning. I didn't take much. I took one, and I'm not even sure where I took it. But I ended up getting a break even on the trade anyway. I'll just go through the trade setups so you can identify them and see them for yourselves, see how simple this is. We're using the same thing here as we're doing on the NQ, same set of indicators. Actually, the same set of indicators across all the charts. We're using all the markets using the same set of indicators. So let's just start right out. This is the YM. What we are looking for here is for the green to move away from the blue to start diverging from it. That's what we call divergence. In this case, it's bullish divergence because the cycle is headed up and moving up, so it's bullish divergence. When the MA1 is crossed the BBC and pulled back down to test this support area that's identified by the BBC, which is the green line, that is our support area. This is telling us that the market wants to go up. This is telling us that we're at support. The up close is the trigger, the thing that you're waiting for, the momentum to move back in the direction of the cycle down here. And right there was the opportunity. So there was one there, one there. On this one over here, you see the cycle is moving down. It's red and moving down, so we didn't like that one over there. On this one right here, the cycle was blue and moving up, so we didn't like that one. For the short, for the short. And we didn't like this one for the long. Right in here, I missed this right in here, but this would have been an opportunity right in here as well to get long right there. I'll highlight it for you. It drew down a little bit. It drew down a little bit. It eventually went up. And over in here, we were looking for a pullback to the BBC, but we never got one. Over here this was a good opportunity right here. This is like a B+ grade trade because the MA1 is blue and going up, but everything else is red and headed down. Alright, so you see the MA1 crossed down below the BBC, price moved away from the BBC and pulled back up to test it. When it tested it, this area was acting as resistance. The BBC was acting as resistance. The cycle over here was telling us we had more down in this trade. Alright, this cycle told us we had more down. The divergence between these lines told us this is likely just a temporary pullback. So right there was the entry with the momentum moving down. Okay, and you can see that's happening over and over and over and over again. In here, in here, actually right over here as well. I'll just highlight the actual entry spots with this divergence. That would have been the first one. Right there would have been the second one. Right in here, the down close, right there would have been the opportunity to get short. Right in here. This one, right here, didn't work out. Right, this one right here would have failed. Not worked out. I put 7 ticks risk on these things. And you look for about 20 points target. So you can see again and again and again the same thing over and over happening again and again. And this is scalable. You can do it on different time frames. You can do it on different markets. You can do it everywhere. And right here you see we have the bearish divergence. This is what it looks like when it's starting to set up. You have the bearish divergence right there, so now you would be looking for it to pull back up here, test the BBC, and give you a down close. Right? This is what divergence looks like when it's starting to set up. Okay? That was the YM this morning. We'll keep that going over there. Now this one, the NQ, I did actually take some trades over here on the NQ. I'll show you where they were. At one point this morning we were up 48 ticks on the NQ, and I had a losing trade in here somewhere, right here. I had a losing trade. This didn't turn out to be an optimal trade once I got into it. The cycle started moving up against me. I had an opportunity right here to get out at break even, or maybe even with a tick profit, but I was distracted and I wasn't fast enough, and I ended up losing 8 ticks on that one. Okay, let's scroll over here to the beginning. Now we're looking at the same exact stuff. The MA1 crosses down below the BBC. You have your divergence down here. Price pulls back up, tests the BBC, gives you a down close, you get short. Over here, it had the same thing here on the long side. That one right there would not have worked out. I didn't take it, but it wouldn't have worked out. Over here on the short side, it did have it right in here, but it was a little messy. It was better right in here. It was the divergence there and there. I did take this one. I took this short right here for, I don't know, 10 or 12 ticks, something like that. As it started to move up, right in here there was bullish divergence, but the cycle was red and headed down. Okay, if you'd have gotten long there, the MA1 contained it. I was going to try to do that, but it moved so fast that it bounced up and down really quick, and I ended up missing it. Over here you can see it pulled it back up, tested the BBC, gave a down close. I did get short in there, and I took a little bit of profit on that one. I missed the next one, and the next one, and I actually missed a whole bunch of them in here. I was trading the ES quite a bit this morning too. Right in here you can see price, there was divergence down here, price moved up, came down, tested the BBC, gave an up close, was held in by the MA1. This one right here, there was bearish divergence. Now when it pulled up, it went too many bars above the BBC for me. I only like it to go, if it gets up above the BBC, I only like it to have 1 bar above there before I just wait for the next trade. Right in here you can see we had a down close with the divergence there, and again there. It actually did it again here, but the divergence wasn't as good right here because the cycle was moving up. The cycle portion of the slingshot was moving up. Okay, this is the trade that I took that lost, and you can see right there the cycle portion was really going up against me once I got into that trade. I did have an opportunity to get out at break even on that trade, but I wasn't moving fast enough. I took a long trade here once everything moved up. We had the bullish divergence. I took a long trade right here, and I got out with 1 tick profit on that, I think. Over here, there was bearish divergence, and right there was a nice trade that I missed, and again, right there. I took this one over here. Okay, I took the short right here. It looks like I took a couple of ticks profit on that one too. Then everything got really sideways right in here. It came down. It didn't actually test the BBC here. It tried to, but it didn't, so we didn't get any entry in there. Now right here it's 11 o'clock. Right there was the test of the BBC with the down close with the bearish divergence. Over here we had bullish divergence, and it tested it, and it gave the up close right here, but again, there's 2 bars underneath the BBC right there, so I didn't like that one. Then it got really choppy, and I wasn't all that interested in it. We started our break right here, and it was really choppy during the whole break. Right now you can see, at this very moment, we have bearish divergence and prices moving up to test the BBC. If it tests the BBC and gives a down close, then we would look to sell. Okay? It's as simple as that. This is what it looks like in a live market. So you can all see. This is what this one looked like when I started doing the review over there. This is what the YM looked like, and it didn't pull all the way back to the BBC. Now it's trying to do it. You see how the cycle has gone down some more. We have more divergence now. This one is currently testing the BBC. So if it closes down, we would look to short that. Okay? Alright. Now I'm going to do the ES. We got 64 ticks profit on the ES this morning. It was a nice morning on the ES. It traded pretty well all morning. Let's see. I believe we had, well, let's start over here. 2.5, 3, 6 1/4, 7 1/4, 8, 9, 9.75, 9.75 and 8.5. That is 17.75, 18 1/4 points. From the spots where it hit the BBC this morning, there were 18 points, we'll just call it, available. All right, I got 64 ticks total, but I was trading multiple contracts. Let me just go through. Let me just go through here what I did. All right. Right here, when price came down and tested the BBC, I went long. This was my first trade of the morning, and it was shortly after the open. All right, I went long here. This went a total from my entry. It went a total of 2.5 points. I took 2 points out of it. I got 2 points profit out of that. All right. The next pullback down to the BBC here, I didn't actually take this one because we didn't put in a higher swing. We didn't exceed this pivot right here, so I didn't try to take another trade in the same direction. All right. It came down, pulled up. If you would have done that, that's what that 0.5 point was. I think it only went a 0.5 point from that spot. Is that right? Yeah, that's right. Now over here, once the MA1 dropped below the BBC, price pulled up to the BBC. I shorted again there. I took a point out of that. Okay. Hang on. Okay, I took a point out of that trade. All right, it went a total from my entry. It went a total of 3 1/4 points. All right, but I took 1 point out of it. Okay. It moved around. Now right here there was a high impact news event, so I wasn't trading anything right here. So price moved back up through the BBC and pulled back down right here. This gave 1 point profit potential right here. Or wait a minute. No, this one right here where it dropped down. It hit the BBC and it went down 1 point profit potential. Then it moved up through and the entry was right here. I actually entered on this one and I took another point out of that. Okay. That one a total of 2.5 points. This one where it pulled back to the BBC, it dropped down a total of 1 point. This one went 2.5. I took 1 point out of that. There was another opportunity right here. Dwayne actually entered this one, but I didn't. This was an entry right here would have been an MIT order at 1288 1/4, which means if the market touches that, it's going to enter you at the market, which it did with Dwayne, and it put him in at 88 even, 1288 even. I believe he took 2 points out of that, and it dropped 4.5 points in total. All right, it pulled back up again right here. I wasn't going to take this because it was going right into the weekly trading zone, but you can see it did go a total of 4 points had you taken that trade. When it came up here again, I did not account for this because we were getting into the break period here. But it pulled up here. You would have been looking to enter here at 1283 1/4. It dropped 3/4 of a point before it pulled back and went up. Now, right here, in all this chop right here, there were over 350,000 contracts traded in this area right here, I believe, from here to here. But once the MA1 got up above the BBC and price pulled away and back down to it, there was an opportunity to enter in here for another 2 points roughly, something like that. Anyway, the trades that I took, got me 64 ticks profit this morning in the first 2 hours. Actually, most of that was in the first half an hour. Actually, it all was in the first 40 minutes. These trades right here. All right. And I didn't actually take any more trades after that. The yellow arrows are the trades I actually took. The circles are the trades that set up. Okay. And that was it. So on the morning, we closed out with 14 ticks profit, NEQ, 64 ticks profit, ES. All right. That is where we're going to wrap it up right now. If anybody has any questions about anything, oh, good. You do have some. Can I explain the BBC, the moving averages, and the slingshot? I can, Matt. What I would suggest, I think, did you sign up for the free trial yet? If you didn't, this is how you do it. You go to www.cfrn.net/apply. Okay. Yeah, I thought I saw you in there this morning. Sure, I'll explain them. The BBC is the green line right here is the BBC. That is what we buy and sell off of. All right, that determines what price we're going to buy and sell. On the ES 10,000 contract, we actually buy and sell the BBC. We round up or down from the location of the BBC. You can see right now it's at 1284.25. So we would put an MIT order right there at 1284.25. But if it were above it a little bit, like 1284.27, we would round that up to 1284.50 and put an MIT order there at 1284.50. An MIT order is market if touched, and what that means is if the market touches 1284.50, it's going to enter your order at the market. On the ES 10,000 contract, it's okay to do that. Well, I say okay. I'll put that in quotes. To do that because the market is so liquid. You're not likely to get more than a tick of slip. 2 at the most, because the market is so liquid. These other markets, if you go in at market, you might get 2 or 3 ticks slip. So you have to be a little more careful about that. The dollar value per tick on the ES is $12.50 per tick. Okay, $12.50 per tick. The MA1 is the thing that determines the direction that we're going to be looking to trade. Well, it's one of the things. It's one of the things that determines the direction of the trade. If it's crossed down below the BBC, we're going to be looking for shorts. If it's crossed up above, we're going to be looking for longs. All right. So once you see this cross down, then you know you're in shorting mode. Once you see it cross up, you know you're in long mode. And then you just have to look at the other things to have it all come together. All the pieces come together at once. Like right over here. Let's just show you again on the ES. What I was looking for this morning. This was the first bullish cross right here. This was pre-market, so it's not marked up. But the first bullish cross was right there. As soon as you got that cross, you're looking for price to pull away from the BBC. Have one bar pull away from the BBC. And then pull back down to it. You would be looking to buy the BBC at that point. All right? And ride it up. That's what I did up here. Price had pulled away. It came back down. I had my order to enter right over here. And I entered and I took profit right over here. All right? Because this is above. That's telling me I want to be looking for longs. We had bullish divergence down here. Everything was good. Now, when it flips around, you see the MA1 got below the BBC. Zach, that's a good question too. On the ES 10,000 contract, I buy and sell the BBC. I round the BBC to the nearest tick, and then I use an MIT order. That's on the ES 10,000 contract. All right. All the other ones, all these other faster ones, I wait for the close in the direction of the cycle to confirm the trade. All right. On this one, I wasn't selling the BBC right here. I was selling the close once the bar closed. That's the only difference. All right. And the way that I do this is the way that I do all the 4-tick range things. The only market that I do that just buy and sell the BBC thing is the ES 10,000 contract. Okay, you can do this, trade it like this with the ES as well on a 4-tick range right here. I don't have all the pieces to the slingshot in here, but if I just do this, I will put them back on. We were using a bunch of these things in a partners meeting last night. But right here, you see you have your bearish divergence, your cross down below the BBC, space in between, price pulled back up, tested the BBC, gave you a down close. You could be shorting right there. Okay, if you wanted to trade the ES that way. You'd probably get more opportunities than you would get over here. Okay. But for the sake of argument, we trade off the BBC on the ES 10,000 contract. All these other ones that are faster time frames, I look for the up or down close. Okay. And the slingshot. The slingshot is pretty complex, Matt. Come into the trial next week some more, and I'll go over the slingshot more with you. But basically, what you're looking for on the slingshot is the divergences. There are other things that you can look for. There's other ways to use a slingshot to trade. To grab some nice momentum trades, if that's what you want to do. I go over that quite a bit. I went over it last night in the partners meeting for a little while. There's quite a bit going on in there. Okay. It's quite, it's 12:41 right now, and I've already gone over quite a bit here on my recording. So I'd be happy to talk to you offline if you want to discuss that. Okay. I will send you something all about that. All right, Matt? All right. So that said, I just realized it is 12:41. So I am going to wrap up the recording right here because I know there are people waiting out there. There are people waiting to come in and entertain you. All right, and possibly teach you something. All right, so I'm going to stop the recording right now.